So I think actually the biggest story in markets right now is this push-pull between a decelerating economic growth picture and how effective Trump will be at manipulating or coercing or whatever you want to call it, the Federal Reserve action. I think this recent bout of strength in the market is due to last week we had a very hawkish Powell, like resoundingly hawkish SCP and rate forecast projections. We saw unemployment rate expectations go down, or up, excuse me, worsened. Inflation up, worsened. And yet they actually turned into an even more hawkish rate cut stance. So those facts together are very not good for the market, like in normal times. And I think we saw this over the weekend. The Iran thing, I do also agree, was a big fade because Trump spent the first 3-4 months of his presidency on a sole mission, doing anything, signing any deal to get the price of oil down. So he wasn't going to do anything geopolitically that reversed all of that effort. But what happened after the Fed meeting was the two formerly most hawkish or very hawkish governors, Waller and Bowman, who on the surface it sounds crazy because these two formerly hawkish people came out and said they support July cuts. But in reality, it's not that surprising because they're the two people that Trump appointed in his previous term who have the best odds of becoming the next FOMC chair. So for me, yeah, if the Fed does take preemptive action, if you've noticed in Trump's tweets, notice his latest ones now go after the board, the FOMC board, not just Powell anymore. He's basically trying to instigate more, it's not working on Powell, get everybody else to kind of rally behind to take action. And ultimately, the market's only pricing in 20% for July, so clearly people don't really believe it thus far. But I do think that for asset prices where NASDAQ, S&P 500 multiples sit at all-time high-esque valuations, where there's not much room besides earnings growth, it's basically this lever of liquidity that the market is debating whether or not it's going to be in July, is it going to be in September, is it going to be after Powell's done in June of next year? So for me, that's the biggest thing, I think, in markets that maybe people are talking about it, but I think it's very important. Ultimately, I think that at some point in the second half, when a lot of these economic forces do start to weigh more heavily on the economy, I think there's going to be a more meaningful deceleration in the growth picture, and that might have negative implications if unemployment rate goes up. The passive flows maybe slow down into what's keeping equities so elevated. So I don't think it's as sanguine of a risk-taking environment as most people believe. And you also have, on the other side of the big, beautiful bill passing, a very large supply of Treasuries to refill the TGA, which should put upward pressure on yields.